Accounting for cash-based compensation is easy. The company's expense is just the amount of cash paid out to employees. Accounting for equity awards can be a little bit more complicated. In this video, I'm going to break down 3 simple principles to help you understand how your equity awards are accounted for. Now, when we are talking about accounting, what we're really talking about is how the awards are reflected in the company's income statement, which is also known as the P&L, or the profits and loss statement. This statement reports all of a company's revenue, all of your expenses, and then the difference between those two amounts is the company's net profit or net loss. One of a company's expenses will be the compensation that it pays to its employees. In fact, for many companies, this is their most significant expense. This includes all the wages and salary. It includes bonuses, it includes things like medical benefits and other benefits. Any reward that we offer to employees for the work that they're performing for the company is going to be a compensation expense for the company. And that includes our equity program. To account for our equity program, we need to answer 3 questions. The first question is, when do we calculate the expense for the award? The second question is, how much expense? And the third one is, over what period do we have to recognize that expense? Let's start with when. We calculate the expense for equity awards on the measurement date. This is just the date where we're essentially going to put a stake in the ground and say, this is how much the arrangement costs. For equity awards that are settled in stock, this will be the grant date usually. And for equity awards that are settled in cash, it will be the settlement date. Now that we've determined the date that we're going to use to calculate that expense, the next step is to calculate the expense. For full value awards, the expense will generally just be the value of the underlying stock. For stock options, we will have to use a formula called an option pricing model. And this formula calculates what an investor would be willing to pay for the option. And that's generally going to be less than the price of our stock. Now that we've calculated the amount of expense, the last question to answer is, what period do we have to recognize that expense over? And in general, we recognize expenses over the period that they produce revenue for the company. In the context of equity awards, that period is going to be the period that the employee is earning the award. So for most equity awards, we will recognize expense over the vesting schedule of the award. Now, you might have one more question, which is, gosh, when is the expense ever adjusted? And there are some times when that expense that we calculated does need to be adjusted. For awards that are settled in stock, there's really only 2 times when we're going to adjust the expense. The first would be if the employee forfeits the award. We generally don't have to recognize expense for awards that are forfeited. Now, one exception to that would be awards that vest based on market conditions like stock price performance or total shareholder return. And for those types of awards, we recognize expense even when the award is forfeited. But for all other awards, anytime there's a forfeiture, we won't recognize expense for the award. The second time when we will adjust the expense is if we modify the terms of the award. If we change the rules for the award, then we have to look at what the new rules are and figure out, do we need to adjust the expense because of that? Now, for awards that are settled in cash, for those awards, we're actually continually adjusting the expense all the way up until the settlement date. And it's only at that point that the expense will become fixed. And that is equity award accounting simplified. Okay, let's be honest. You probably have more than just one question. You probably have a whole lot of questions. And guess what? I got a whole lot of answers. In fact, we have a whole topic area on the NSPP website devoted just to equity award accounting with lots of articles to answer all of your questions. We'll include a link in the show notes. Be sure to check it out. I hope you enjoyed my video today. If you did, hey, why not share it with your colleagues on LinkedIn? Maybe they'd like to have the accounting treatment of equity awards simplified for them as well. And those shares really help us out. Win-win. Thanks for watching.